Hello, everyone. Welcome to another webinar by Smartkarma. I'm your host, Michael Tegos, and today I'm very happy to welcome Kyle Rudden. We'll be presenting on the topic of global sustainability and ESG frameworks and focusing on what matters most. As we wait for people to stream in and get settled, some quick housekeeping. Do feel free to send any questions using the Q&A button on your Zoom app. Please do not reshare or reproduce the contents of this webinar without express permission. A recording of this webinar will be available on the registration page after we're done. And with that, Kyle, let me welcome you to the webinar. Thank you very much for being with us.
Thank you, and good afternoon, everybody. Thank you for your interest and participation on the webinar, especially so late on a Friday. I am going to start with a very brief introduction and then just get right into it. My background can be summarized really in two eras or epochs. The first half of my career, the most recent half of my career has been entirely dedicated to sustainability and ESG investment research. And prior to that, I'll call it the first half of my career, was in more traditional investment research roles, mainly as a sell-side equity research analyst and head of JP Morgan's Global Energy Research Group. And there were also some really early and brief stints in fixed income research, both high yield and investment grade. I joined Smartkarma a little over a year ago to bring my particular brand of what I call alpha-centric ESG investment research to the platform. I really felt it was a perfect fit for two main reasons. One, I'm a staunch supporter of independent research, having come from the sell side. And I also view Asia as kind of the next frontier of ESG investing. Still not what it is in Europe or North America in absolute terms, but in relative terms, Asia is the epicenter of current activity. And just a quick clarification regarding that alpha-centric thing. My view is basically that ESG investing is first and foremost investing, that doing greater good is really important. I don't discount that, but without investment returns, we can't do that greater good for very long. So in other words, alpha supports impact, or sustained impact, if you will. Very quickly, the agenda, the introduction is kind of a moot point. I just did that. Kind of broken this down into three main sections. They're all interrelated. It could have been one section, but just for clarity, I made it three. Roughly, I would guess 20%, 60%, 20%, but we'll see. The first thing I want to do is just very quickly put what we're talking about into context and offer some basic working definitions. Secondly, discuss what I call the big three frameworks, the Sustainable Development Goals, GRI and SASB, in some level of detail. It'll probably be the bulk of the three. And then just kind of very briefly introduce SDG investing, or what's, SDG alignment, integration, all basically the same thing, different terms. Briefly introduce it as an example of how frameworks can work together. It's much too big a topic to get into too much detail on, but worth pointing out. I'll close just by really quickly reiterating some key points, and then we'll get into Q&A. Last time I did one of these, I wound up speaking too much. So this time I kept the prepared comments brief enough to ensure ample time at the end. If at the end anyone wants to go into more detail on anything I said, we can certainly circle back. First section, I won't belabor this one. It's kind of a necessary start to the conversation, though. Specifically, I want to, one, put frameworks, the kinds of frameworks that we're talking about into the context of the overall ecosystem, and then two, spell out a few key definitions, two in particular. The ecosystem, now this chart's not meant to be read in great detail. I really just wanted to point out that sustainability standards and disclosure frameworks, the kinds of frameworks that we're going to talk about in this webinar are really part of a vast and ever-growing sustainability ESG ecosystem. It's the quote-unquote alphabet soup, as it is often called, which is referring to the jumble of abbreviations and acronyms. This graphic is representative, but by no means exhaustive. Of the ecosystem, and it's categorized based on my interpretations. I really should note that classifications are tricky. It's largely subjective, and there's a lot of overlap. So what you're seeing is kind of my take on best fit categories. And again, don't overthink this one. It is one busy diagram. It would have Edward Tufte, the godfather of data visualization, rolling over in his grave if he were dead and in a grave. But busy is kind of the point here. I really just wanted to show how easily the frameworks that we're talking about, standards and disclosure frameworks, often get lost amongst and confused with other categories and organizations in this ecosystem. And that confusion, it has a lot to do with how loosely certain terms are thrown around, which I'll get to in a second. I added this one at the last minute. I got frustrated. I was trying to get this one to show 3 levels in a legible way, and I couldn't do that. So it's bad enough as is. So what I did was broke out that sustainability framework section, the upper right slice of the pie. I did that in a separate chart, which is what this is. And those 3 subcategories are what I couldn't get into the prior chart legibly. So that sustainability frameworks category can be broken down into standards, standard frameworks, disclosure frameworks, and 1 sustainable development framework, the SDGs. Again, not really to overthink this, but the standards frameworks, the major ones that we'll talk about are GRI and SASB, but this chart also shows ISO, the International Standards Organization, most notably ISO 26000, which is a social responsibility disclosure framework, and greenhouse gas protocol. Disclosure frameworks, again, this is not exhaustive. This is really just showing a sampling. They range from kind of hybrid standards disclosure frameworks like CDP, formerly known as Carbon Disclosure Project, to more pure disclosure frameworks on the extreme end, like several exchange listing rules. I just threw in Hong Kong and Singapore Exchange, but there are others. I'll address all of this in more detail. I just really wanted to break out that one section in that chart. The 2 kind of key definitions that I wanted to point out, and this is kind of wrapping up this section, are sustainability standards frameworks and sustainability disclosure, aka reporting frameworks. Again, there's some overlap between the 2, but there's often confusion. Often the 2 are thrown around as being synonymous, and they're not necessarily. If you're dealing with a purely standard framework and a purely disclosure framework, the differences are that the standards framework dictates what kind of sustainability data and information to report, and maybe even how to present that as data. For example, report annual gross greenhouse gas emissions, which is the what part of it, in tons of carbon dioxide equivalent, which is how to present it. But they wouldn't necessarily dictate how, when, where to disclose that data. For example, a pure standard framework wouldn't say, disclose this annually in your 10K, 10Q, whatever. Disclosure frameworks are kind of the opposite. They dictate, again, this is purely a pure disclosure framework, dictate how, when, where to disclose the sustainability data that's dictated by a standard framework. So, for example, the Carbon Disclosure Standards Board is a disclosure framework. It focuses on how companies should disclose climate-related issues in mainstream financial reports. And it doesn't just defer to standards frameworks. It actually works with GRI, SASB, and others in deciding what should be disclosed. But the CDSB is really focused on how and where the data that GRI and SBA say a company should disclose, how and where that is disclosed. So just some basic clarifications. This is the almost deleted slide. It's a terrible chart, so terrible, in fact, I almost deleted it. And actually, I did delete it, but I put it back in. And here's why I deleted it and why I put it back in. It fails miserably in accurately depicting what I tried to show, which is the continuum of standards / disclosure frameworks. It's not black and white. That there's a continuum. There's some overlap. The problem with this is that it's just way off in terms of scale. For example, the greenhouse gas protocol isn't really right between ISO and SASB on the quote-unquote disclosureness scale. But I left it in because, one, I was running out of time to do it right, and I wanted to illustrate the point that a continuum does exist, that like a lot of things in the sustainability ESG space, nothing is ever black and white, one thing or the other. So I threw that in there. Be careful on how you interpret it. And let's forget that slide ever happened. We'll move on to the next one. The main section, kind of the big three global frameworks. Those are the three I mentioned before. It shouldn't come as a surprise that a group that I call the big three is comprised of the UN Sustainable Development Goals, GRI, Global Reporting Initiative, and the Sustainability Accounting Standards Board. They are the three largest generalist-ish global frameworks out there, but it's more than just being the three largest. They're complementary. Together they really work as a trio, not always as a trio, but generally, like the SDGs and GRI or the SDGs and SASB, they are a trifecta that is complementary, as we'll see shortly as I get through this. Just a quick rundown of each from the proverbial 50,000 foot or meter level. The SDGs, think of them, they're actually quite different. That's a sustainable development framework, but think of them as the triple bottom line, which, by the way, if you're not familiar with the triple bottom line being environmental, social governance, and economic. So it's ESG plus the economic element or the financial element. The SDGs represent the triple bottom line of societies, and it really is a government level reporting sustainable development framework. GRI and SASB are two company or issuer level frameworks, GRI being the larger of the two and kind of the more generalist and more widely adopted. SASB is far more investor centric by design. In that sense, it's great. But as I'll get to in a second, it's a lot less popular, in terms of global adoption at least, a lot less popular than GRI. I'm just going to walk through on this slide, and the next two slides look a lot like this one. Just walk through for each of those another level of detail, not too much, but just to put them into context. I'll really just kind of hit on the main points for each. Think of the SDGs as kind of like the big overarching framework of the three. Aside from it being a sustainable development framework, whereas the others are corporate frameworks, corporate reporting frameworks, a major difference is that the SDGs lean heavily, really heavily towards social and environmental issues, whereas GRI and SASB are far more balanced. The SDGs are comprised of 17 very high-level goals. They have underlying them 169 targets, things to achieve by, certainly all by 2030, some are a little bit sooner, like 2020, 2025. And across the board, the goals really do cover every triple bottom line pillar. They address poverty, hunger, health, education, equality, energy, climate change, economics, governance issues. But again, there's this very, very marked emphasis on environmental and social issues. Regarding investor relevance, this wasn't, the SDGs weren't designed as an investing framework per se. I say per se because there's an element of investing too. The private sector is expected to fund a big chunk of sustainable development, but this was never intended to be used, as an investing framework by investors certainly like SASB and even like GRI. However, the SDGs are surprisingly and increasingly being used by issuers in terms of disclosing their sustainability and ESG performance right alongside GRI and to a lesser extent SASB, but most importantly by investors, and especially in the context of what has become known as SDG investing. That's the third section of this. So we'll address that in more detail, but that's kind of the interesting part, the interesting aspect of investor relevance, because a few years ago the SDGs were great, but had almost no relevance to investing per se. GRI, like I said before, it's kind of the larger of the two corporate level frameworks. Kind of think of it as being in the middle, if you will, in terms of scope, target audience, global adoption rates, etc. The main differentiator between GRI and SASB is GRI is designed for a diverse audience. It's not investor specific. And most critically, it's materiality agnostic. It really leaves the determination of what's material and what to report to the issuers, and emphasizes the societal level impact of corporate ESG performance. In other words, the impact of corporate ESG performance on greater society versus on the financials of that company. That's the big differentiator between GRI and SASB. Quickly, 36, high-level sustainability reporting standards, kind of the equivalent of the SDG goals. They're general and topic specific. There are a lot more underlying disclosures. It is triple bottom line based, meaning it covers environmental, social, governance, and economic issues. And it is fairly well balanced. If anything, there's maybe a slight leaning towards governance, but it's pretty balanced. As I've said in one way or another already, GRI wasn't designed for investing. SASB was. In that sense, SASB is really a better framework for investors. But when global adoption is so much lower, I mean, you're really dealing with only a few hundred companies that have adopted SASB, and it's largely in the US. So for a real global investor, GRI is probably the better investor framework from that standpoint, and that is more widely adopted, and you just get more companies reporting using it. SASB, again, the most investor focused of the big three, but has the lowest global rate of adoption, largely US, as I said. It is investor focused by design. It was really from the bottom up designed with investor input, with investors in mind and investing in mind. It has some opinionated views on materiality, and materiality means materiality to corporate financials and to investing, and materiality on a sector-specific basis. It really is a great framework. I just wish it were more widely adopted. There are 77 sector-specific standards that include both reporting and accounting issues. It is TBL based like the others. Although if you look at the SASB materiality map, and you can just Google that and it'll be the first thing that'll show up. It looks like an ESG framework, but ultimately, if you really get under the hood, it's a triple bottom line framework. And as I said, by investor relevance, it's the most investor relevant, but because it's the least adopted, for investors, global investors, looking at companies outside of the US, it can be problematic because it just isn't as widely adopted as GRI. Third section. I just wanted to briefly mention, as an example of what I said earlier, that the big three, the trio, are complementary. It isn't. I don't consider them the big three just because they're the three largest, but they do work together. And one example is, as I said before, SDG investing, or SDG integration or SDG alignment. I mean, the terms SDG integration and SDG alignment imply, in my mind, something more formal. SDG investing is kind of a looser term. It really just means kind of aligning either formally or casually the SDGs with investment decisions, or vice versa. And I published one. I'm going to publish a series of reports that look at mapping the sustainable development goals to issuer company level frameworks. I started with GRI. I'm going to do SASB next, because doing so, I mean, the formal integration process is very case specific and super complex, but just even casual consideration can really benefit all investors, regardless of where they stand on the sustainability ideology spectrum. The SDGs, SDG performance, country performance is very directly linked to macro and micro economic risks and upside. In that respect, the SDGs from a SDG down standpoint, mapping the SDGs to securities, issuer securities and portfolios, is in theory relevant to all investors. It's great macro research, it's great due diligence. For more altruistic minded investors, mapping in the other direction, say GRI to SASB, or any corporate level framework to the SDGs, can help in directing capital, directing investments to specific areas of impact, such as environmental issues like climate change, clean water, et cetera, and so forth, or social issues like poverty, education, equality. But I talk about them in terms of the process, in terms of alpha and impact, but really the two they're certainly not mutually exclusive, and they're often really kind of symbiotic. That SDG integration and alignment, formally, casually, can create a virtuous cycle where directing investments towards certain SDG goals in the end winds up benefiting things that are more traditional drivers of alpha, such as basically economic growth is probably the best example. It is, like I said, a very case-specific process. It's complex. There are a lot of localization issues. I mean, this is a real high-level overview. This table, I'm not going to read it to you right now, but is really kind of a summation of the risks, the upside on a macro and micro level, kind of categorized by alpha and impact. When you have a chance, we'll get you a copy of the presentation afterwards. You could read through it. I've sort of summarized everything, but the SDGs reflect, in effect, macro risks and opportunities. Integrating SDG thinking, formally, casually, to whatever degree, can aid in securities analysis and selection. Driving, we're focusing on aligning SDGs with specific investments can reduce overall risks, the ones that I just alluded to underneath alpha. And as I said before, supports desired areas of impact, kind of from the impact investing angle. With that, I'll take questions. And like I said before, I really, in reaction to what I did last time, I made sure that these prepared comments were pretty brief so that we had time. I'm happy to go back to any of those slides and go into more detail. Just let me know which, and we'll do that.
Yeah, thank you very much for that, Kyle. So I wanted to kind of touch on something very specific in that regard. So when it comes to the adoption of these frameworks in Asian regions, in the Asian markets, where are we at, do you think? And what stages is it in?
Oh God, that's a separate webinar. Asia as a whole. And I'm gonna let's start by I'm just gonna deal with Asia, not APAC. Australia and New Zealand are somewhat different.
Sure.
But Asia is wonderfully diverse. I mean, culturally, economically, et cetera. But that makes things ridiculously complex when it comes to that question. I think I'm trying to think of some short answers to that. Asia, as I said in my introductory remarks, I mean, right now, Asia, in relative terms, in terms of activity and just progress, is really, to me, the epicenter of the new frontier. There's a lot going on, but drivers, are different in different regions. I mean, you may get, one region like, for example, Singapore, where, the interest is climate change and flooding first. Elsewhere it may be driven by regulatory change, exchange listing rules. It really depends. I've been looking pretty closely at some of the exchange, some of the preferred frameworks of some of the largest companies on certain exchanges, and there's no doubt that the dominant two are SDGs and GRI. I mean, just from a purely company level standpoint, it's GRI. And as I said before, many companies are voluntarily also disclosing SDG related performance alongside their primary company framework like GRI. So it is the SDGs and GRI, zero SASB in terms of what I've seen so far. And then there are a handful of kind of specialty frameworks, like I forget the name of it, but it's a palm oil sustainability framework. There's GRESB for the REITs, which is the global real estate sustainability benchmark. But in terms of general frameworks, hands down, the SDGs and GRI. SASB not even a close second.
I guess Asia as a territory, because of a lot of emerging markets around here, it can have a bit of a ESG first approach in its investing philosophies, right? Do you think that's fair?
What do you mean by that?
So I think perhaps a lot of the Western markets need to kind of come around to ESG principles and frameworks, whereas some of the more emerging markets in Asia, being younger, can sort of adopt a lot of those frameworks and philosophies upfront, basically.
Yeah, no, absolutely. And the way I view it is there's, when a lot of times when I say that I see Asia as the new frontier, the epicenter, or whatever, I have to very quickly qualify that with the relative absolute thing because people think I'm nuts. But in many respects, in terms of growth and trajectory and kind of where Asia's, and again, this is very, very sub-regional specific, but where Asia is as it approaches that sort of hockey stick part of the growth trajectory, it's in many ways leapfrogging. Yeah, well, I don't say leapfrogging Europe or North America, but certainly bypassing a lot of the intermediary steps that Europe and North America went through. And one example is exchange involvement. If you look at some of the exchanges elsewhere in the world, many of them, particularly NASDAQ, are on top of the ESG game now. They're leaders, et cetera, and so forth. But early on, their mouths were shut. And they got in late, and they had less of a say in things, how things developed. Whereas in Asia, you've got Hong Kong and Singapore, and to some extent, first Malaysia, really getting in early and kind of, I don't want to say dictating how things evolve, but having a say in how things evolve, which makes perfect sense because exchanges are, perfect arbiters of progress. I mean, they sit at a critical intersection of companies and capital and regulators and NGOs. So in a way, I think what you're getting at, the way I'm interpreting it, I agree with, is that Asia, again, being sub-regional specific, but in general, Asia is kind of bypassing a lot of the middle steps that Europe and US had to go through. Asia is doing or appears to be doing in years what took elsewhere here and in Europe. What took decades here and in Europe.
Yeah, that's exactly what I was asking, and I'm glad to see that that I'm not crazy about that. Well, thank you very much, Kyle, for taking the time to talk to us about this very timely topic. I think if there are no more questions at this time, we can wrap it up. And as I mentioned at the top, a recording of the webinar will be available on the registration page afterwards, as well as the presentation deck. If you have any other questions, feel free to email research@smartkarma.com, and we will get your questions over to Kyle. And finally, do note that Kyle is available for bespoke research requests or premium services on this topic, so do contact your Smartkarma account manager in this regard. Kyle, thank you very much once again for being with us.
Thank you, and thank you everybody for your participation.
Thank you, everyone, and we hope to see you at our upcoming webinars as well. Goodbye, and have a great weekend.